Diversified manufacturer and distribution group Rolfes reported a 16.1% rise. That's in diluted headline earnings per share to 17.3 cents for the 6 months ended December 2011. The company recently acquired both Agchem and Amazon Colors with the aim of penetrating new markets in Africa and boosting revenue. I may have completely mispronounced the name of the company. That is it, Agchem? Agchem, there we go. This is in your sweet spot, one of the stocks that you have in your fund, Anthony. What is it about Rolfes that excites you?
Well, take a step back. What we try and do is look for companies that have kind of gearing towards long-term tailwinds. We think that the mining and agricultural space in Africa has a lot of legs in terms of growth. So we really look for companies that are well run, have strong balance sheets, can generate cash, can acquire earnings at attractive valuations, and that makes for, together with a tailwind, that makes for strong earnings momentum and investment returns.
Big presence in Kenya, Zambia and Ghana. Is that exciting for you?
Absolutely. So there's a guy called Arnold Ferree who owns Pinnacle Technologies, done very well by acquiring growth in the IT sector. He owns 40% of this company, Rolfes, and we think that he can replicate that success through Rolfes. We think there's much more opportunity for him to acquire growth in the chemicals distribution business or sectors than there is, funnily enough, in technology. So we think that the strategy around building a distribution network into Africa and then pumping chemicals products through it is a very well thought out strategy. It's also got exposure to agricultural chemicals through this acquisition, Agchem. And that's, together with the mining kind of growth that we're seeing in Africa, we think will make for some very heady growth numbers in years to come.
At R3.45, when we are looking for that next 10 bagger, could this be the key?
Well, look, they've already done very well. So in recent months, they've moved from around the sort of R1.50 level right up to the R3.50 kind of space. So, that's a huge move. Look, they're a survivor. So they listed during the last kind of small caps listing boom, and where many basically fell on their faces and had negative earnings or losses, better put. This company at least has hung in there, and it basically has generated in the region of 20 cents a share of earnings. And they had that little small spell in 2009 where everybody did exceedingly badly, where they kind of had negative earnings headline adjustments year on year and fell to around 10 cents a share. From here, I'm not sure. Anthony paints the picture. He points out the involvement of the Pinnacle guy, Ferree, which is kind of interesting, isn't it? When somebody who's a very successful business in another space has this little quiet other listed company where they've got a stake.
Perhaps we should take note. In other words.
And the other shareholder they have is Bulelani Ngcuka's investment company, and you'll remember he was the director of public prosecutions, the NPA chief who left and went into business. I like him a lot. I think he runs his investments on a very hands-on basis, and they're a good empowerment shareholder to have. So again, there's a lot to like, although I do worry about the fact that we're talking about a company that's got 350 million rand market cap, so it's a pea shooter sized operation. Its average traded value is 200,000 rand a day. I don't know, you've got to really know your oats to dabble at this end of the market.
And you obviously feel as though you really know this company, considering the pea shooters. Is that the terminology we're using here? The pea shooter size?
Yeah. Well, if you make great returns on pea shooter size companies, great. We started buying this company at 80 cents, continue to buy it right the way up to R1.50. We think that this is a potential 10 bagger. So we're very happy with the liquidity risk we take in this company because we get compensated to a large extent by the massive growth potential.
What are you doing with it now at R3.45?
We're still buying.
We're still
nibbling at the margin, but we have a core holding in the stock. It's about 6% of our fund, and we're happy to
Do you have a target price? Are you prepared to share that target price with me?
We think it's on a forward P of about 8, dividend yield of about 2.8%. On organic growth. We think that there's real room for them to acquire in the mining chemicals business, and I think that could really juice up potential returns. I think also once they've bedded down this Agchem business and they start extracting the real synergies that are in it through the distribution model, we think that earnings could really come alight.
What about the fact that Rolfes could be acquired by a big mining entity that needs access to their product?
I suppose so, and perhaps Anthony can comment on that if he's noticed. But he says he's been buying. Maybe he's the one who's been nibbling the 200,000 rand a day that's been, constituting the daily turnover. I want to also, though, put another thing on the table that worries me about all of the stocks we're talking about tonight, and that is their risk associated with imported competition, simply because the level of the rand determines their margins, because it's not as though they're the only companies in the world that are making specialty chemicals, that are manufacturing paints and pigments for the auto industry and for the sort of other ends of the business. So what's the question I'd have is, how secure are their markets relative to some of their competitors vis-a-vis imports?
Well, most of the pigments go into resins, which is plastics, and that goes really into the manufacturing processes. So, I think once you get integrated into the supply chain, you really get entrenched. People or manufacturing operations are not going to...
is if somebody comes in and undercuts you from a price perspective, quality the same, people are going to move because margins everywhere are under pressure in a tougher economic environment.
Sure. I think if you compete on quality of service as well, and you are able to, again, entrench yourself in that supply chain. Often the portion of the overall product cost that their clients incur, the Rolfes element is very small. So it's not going to make a huge difference to the overall cost of their clients to move, the specialty chemicals business away from Rolfes to somebody else. So we think that risk is fairly small.
Hot or not?
Not hot, on the basis that companies this size are automatically not hot.
And of course, disclosure time, you own this stock, so if you don't say it's hot, I'm very worried about your fund. Hot or not, Anthony?
It's hot.